Welcome to 2020, where social tensions are breeding violence, an active pandemic has taken hold most of the earth, and stocks are at all-time highs. Finding value in this confusing and unbelievable market is getting harder and harder, but one stock has emerged as a tremendous buying opportunity. Intel. If you own a computer or laptop, you have likely heard of this massive technology company that has recently taken a hit. Going by the ticker INTC, the stock has performed poorly in 2020, drawing a lot of criticism from various analysts who have been quick to downgrade the business. In today's video, we'll go over the various reasons why the company has struggled and how this is actually an opportunity to invest and make some money. I've added links in the description below so you can actually skip to the various portions of the video if you don't want to listen to this full analysis. Outside of the narrow short-term forecasts, Intel is a great play when we frame it within a long-term model. Over the last 5 years, the ticker has been relatively volatile, bouncing up and down between $30 and $70 a share. Earlier in the year, it even reached a price of $70 a share before crashing down to $45 as the news of the global health pandemic spread and fears of an economic disaster loomed over the industry. But unlike Apple, Microsoft, and the rest of the tech giants, Intel never really made that full recovery to new all-time highs. It started to build momentum before crashing again following some really bad manufacturing news where the company announced that the production of its next generation chips will be set back until 2022. This news comes after years of delays getting its current generation of chips on sale, a huge setback that triggered a massive sell-off, allowing for value investors to start investigating the potential of this tech giant. At the end of the day, Intel is a household name and has a very low price to earnings ratio of 10. Given the craziness of the current environment where low interest rates and high valuations dominate the tech world, an opportunity like this does not come often. The $50 price level is a good floor that in the past has proved to be quite reliable. Operating in a cyclical growth industry, the company, and many like it, are always focused on the short term. Wall Street has proved over and over again that short-term thinking is what gives rise to value investment opportunities for people looking for great long-term plays that have a whole lot of tailwinds behind them. Recent price drops have scared many away from the business, but if we break these down, they should not affect the company going forward. The most recent stock drop related to the Q2 earnings announcement was due to the 7nm product delay of 6 months, which will give competitors more time to gain market share. This announcement led many analysts to downgrade the stock as their models gave a lower value for the company. But like I always say, you must be careful when listening to these so-called experts. Their jobs revolve around known facts and using these facts to project stock values in the near term. In many cases, when analyst remarks turn negative, it's often a great sign to buy if you plan on holding long term. Intel finds itself in a similar situation. Looking over the following chart, the price targets have been moved by many of the largest investment banks in the world. But at the end of the day, many of the things that make Intel great are missed in these remarks and grades. Dividends, earnings, and buybacks are too boring of factors in today's market to even be talked about. To those on Wall Street, the 3 years it will take Intel to debut their 7nm product is an entirety, and it reflects in their grades, but eventually the product will make it. Long-term perspective is the greatest advantage you can have as a value investor, and besides, Intel product delays are pretty common in this crazy sector. From 2012 to 2019, the company had numerous delays of its most anticipated products. This may be viewed as extremely negative to some, but the current situation is not nearly as bad as stated. Within the semiconductor industry, it's all about being first and developing and putting to market the latest chips. If you can't do that, you miss the opportunity to charge the high margins you get before the competition comes in. This is what hurts Intel at the moment. But we must not forget Intel is not just about the 7nm chip. In the last 3 years, the company has been growing revenues, earnings, and cash flow. Their data-centric business segment is expected to be a bigger and bigger part of the company, with businesses like Mobileye, which are set to grow exponentially as autonomous driving becomes an important part of world transportation. Memory, storage, edge computing, and modem are all great products that are positioned to grow exponentially as the world continues to advance technologically, introducing fast and more complex computing power to billions of users around the world. For investors that wish for stability and security, slow growth with a positive long-term outlook alongside a PE ratio of 10, Intel has all that you might need. And as long-term investors, we must also care about what comes beyond 2023. Given the above, we might see higher growth, better margins on growing demand, which means the earnings could be higher and higher, and the evaluation too. Now going over to fundamentals. If we take a look at the last decade, Intel has proven over and over again it can continually grow even as a giant. From 2010 to 2020, it has doubled revenues, growing at an average of 7% a year. There is no reason to believe that for the next decade, this trend will not continue. On top of this, earnings per share have increased as well and will likely continue to increase because the company has been constantly doing buybacks, lowering the number of shares outstanding continually. If Intel continues to produce cash flows close to $20 billion per year alongside 7 to 10% growth, you will not have much to worry about in the next 10 years. The company has even announced it will accelerate its stock buyback plan, a statement that shows Intel's dedication to rewarding shareholders, which is an extremely important factor given how cheap this stock is. Many businesses who increase buybacks do so when the stock is expensive and things are going good, and don't do them when the stock is cheap due to problems. If we pretend that Intel spends $10 billion on stock buybacks over the next decade, buying up outstanding shares at current prices, even if earnings remain flat by 2030, earnings per share would double. This further increases the likelihood that the stock price would increase well above the $50 level we see today. The buyback activity is likely going to cause a huge upside to the price over the long term. On top of all this, they pay a growing dividend that has doubled over the past decade and will likely continue to grow as revenues increase. Right now, it stands at 2.68%, and with a great balance sheet under the hood, this amazing payout is likely not going away anytime soon. Sure, the company has increased its debt over the last few quarters, but this is largely due to the fact that it's taking advantage of low interest rates. Total long-term debt stands at $36 billion, which is less than 2 full years of free cash flows. Although the company does face risks from competitors like AMD gaining market share, overall, it's in a great spot as one of the few tech giants that is currently cheap. For the future, it has large potential for tailwinds. Although we can't specifically identify the exact catalysts, Intel will without a doubt grow over the long term. Given the quality of the company and the overall long-term outlook of the entire industry, the financial engineering or buybacks, and the dividend, I believe it's a great long-term play that you won't regret having in your portfolio. Thank you guys for watching. Please make sure you hit that subscribe button if you enjoyed, and as always, make sure you leave a comment on what you think about Intel as a long-term investment.